But if the energy costs 3 cents a kilowatt hour, you're gonna turn off your old equipment. You're gonna keep the new equipment running. When the price goes up, you're gonna turn on the old equipment. Bezos' famous line, "Your margin is my opportunity." There was a point when the hash rate got to like 190 or something, and I thought the peak was 170, but there was a surge up by about 10 or 15 exahash. And I posit that that surge was because people turned on third generation mining equipment, like the oldest, least efficient stuff. And there's a relationship. An S19 is generating 40 cents a kilowatt hour right now. Ergo, it is profitable to buy electricity up to 39 cents a kilowatt hour. An S9 was 5 times more inefficient. So S9s were profitable at 8 cents a kilowatt hour. But if you go back one generation before that, if you're 5 times less efficient than that, you're profitable at 1.5 cents a kilowatt hour. So the break-even point is a function of the semiconductor.
Yeah.
Or the joules per terahash, right?
Right.
And that's a technology driver. It's not an energy driver.
Yeah.
And most of the people that model Bitcoin mining, they don't really focus upon the technical efficiency of the miners. And by miner, I don't just mean the one mining rig. I just mean the mining operator that has a mixture of first generation, second generation, third generation equipment. Like if the price of Bitcoin went to $5,000 a coin right now, people would probably turn off the old mining equipment if they had to, unless the energy was free. But if the energy costs 3 cents a kilowatt hour, you're gonna turn off your old equipment. You're gonna keep the new equipment running, and that's an adaptive correcting system itself. When the price goes up, you're gonna turn on the old equipment. Because the more important phenomena to focus on is that over a decade, the technical efficiency of the mining network is going to increase by a factor of 20 to 100, depending upon the rate at which people upgrade the semiconductors. And, there are a lot of ways you can enter into the network and you can disrupt the equilibrium. One way is as a nation state, you can start mining off of a volcano. The other way is you can design a totally new family of ASICs. So, maybe Intel or Apple wants to get into space. They could disrupt it. A big energy producer could disrupt it. Right now, the limiting factor is the number of mining rigs you can get your hands on. That's good, right? That creates some predictability to it.
Yeah.
So if you look at these two layers of security, right, the energy layer is co-opting energy providers all around the world, and the technology dimension is co-opting semiconductor manufacturers. And if one of them, like Bitmain, gets too much power, Jeff Bezos' famous line, "Your margin is my opportunity." If one company gets too much power, then this is not terribly complicated engineering.
Yeah.
I mean, it's well understood how to design SHA-256 ASICs. There are a lot of companies like Qualcomm, Intel, when they get squeezed, they need a new market. This is a new market for them at the price, as the price goes up. And the interesting thing, of course, is if there's only one provider of SHA-256 miners, Bitmain, doesn't that create an artificial scarcity to hash rate? And if there is a scarcity to hash rate, doesn't the price go, the profitability of Bitcoin miners goes up, right? If the profitability of Bitcoin miners goes up, then don't more people want to get in the business? And if more people want to get in the business, don't they need to buy Bitcoin mining rigs? And if they need to buy it and there's infinite money, don't they go and find someone else to break that monopoly? Dynamically distributing Bitcoin mining network, and it is solved for the problem, where do I find the cheapest energy in a politically supportive jurisdiction? That's the problem you're solving for. That's not the same as the cheapest energy. It has to be cheap energy from an energy provider you trust in a political jurisdiction you trust. Okay, what's the answer? Well, the answer is a dynamic equilibrium, right? It's changing every single week, right?
Yeah.
You know, it was different 3 years ago. 3 years ago, there was free electricity in provinces that had empty, excess coal electricity capacity in China. And so you could get effectively free energy. Okay, it was free, but it wasn't politically stable. Now you can go to a politically stable place like Texas and pay 3 cents, or maybe you can get it for 1 penny in Kazakhstan, or maybe you can go some other random place. You could go to Cuba, or you could get a bootleg thing in the jungle from some warlord. The Bitcoin mining network is continually distributing itself and is organic. It's just like asking the question, when we settle around the earth, where should we settle that we will be able to make a living and we won't suffer from famine or tornado? And the answer is, you don't know. I mean, until you've lived 100 years, you don't know that place floods. You'll find out. So what happens? Well, the network distributes itself. Some people make good choices. Some people make unwise choices. This is back to anti-fragile or the like. You make really awful choices, you'll probably be put out of business within 36 months. If you make okay choices, you might last 3 to 10 years. And then maybe there are other choices where you'll be good for 100 years. But maybe you're better off to go to the place where you're good for 6 years, where the energy is 1 penny, instead of the place where you're good for 100 years, where the energy is 5 pennies. And maybe we could debate it. And maybe you have an opinion and we can argue till the cows come home. But what does it matter? It's better just to release the entire creature. Let the entire world work in a Darwinian, Adam Smith, evolutionary fashion, a competitive way. And often, the lesson of the markets is the market is smarter than anybody. Think about what I knew. Half the time I thought I knew it and I was wrong, and sometimes I was right. But the market generally outsmarts the smartest person. So Bitcoin mining is a dynamic market in security, and it's balancing energy versus technology versus political support.